Alrighty, everybody. And up next, we do have Sabrina Martins with UGE International.
Thanks, everybody. My name is Sabrina Martins. I'm the Managing Director of Investments for UGE. Thank you to Planet MicroCap for having us today. This is my first time at the conference. Very excited to be here. With that, I think we'll kick off our short presentation, and then we'll hope to leave some time for Q&A as well. So UGE, we're publicly traded on the TSX-V. Our ticker is UGE. Our current market cap is a little under 22 million CAD. About 38 to 40% of that is currently insider owned. On the right side of this chart, you'll see here we have our share price and volume chart over the last 2 years. Happy to go into any of these figures a little bit more, but let's spend a little time talking about what UGE does and what our vision is for the future of our company. So high level, UGE is a full life cycle renewable energy IPP independent power producer. It's a lot of words. What does that mean? We are from origination through development, through financing, through owning and operating these assets. We are full life cycle renewable energy, mostly solar and battery energy storage. We are an independent power producer. We're geographically diversified portfolio. We target about 12% IRRs unlevered on all of our projects. And we are very focused on building an operating portfolio of assets that's going to build recurring revenue for our investors. Our team is about 60 people with experience across all parts of the life cycle. And we've had experience in building about 750 projects over 15 years. And that translates roughly to about 500 megawatts of generation experience. We have about 320 megawatts of projects in active development currently. It's incredibly exciting, and we'll talk a little bit more about why it is. But even behind that, we've got 3 gigawatts of additional projects in the pipeline in earlier stage development. Our portfolio is distributed across 12 states, and our average project sizes are between 1 and 5 megawatts. And we mostly focus on community solar and battery energy storage, but also have a small portion of the portfolio that's focused on PPAs, so power purchase agreements. Our team has the experience and expertise to execute on our targets. You can see here our C-level, our executive management team has a combined 75 plus years of experience in renewable energy generation. And they've really spent a lot of time focused on building the next tier of leadership. So everything from origination, power marketing, development, construction, deployment, financing and investments, which is my background and expertise, and legal. Our team is really set up to be able to execute on this full life cycle approach that UGE takes towards renewable energy generation. So how is our company different from others? So historically or generally in the industry, you have one company who will develop projects. You'll have another company who will actually build these projects. They'll construct them. You'll have another company who comes in and finances them. You'll have another company who ends up owning these projects over the 20 to 40 years of their useful life. UGE does all of that in-house. We are a full life cycle from development all the way through to owning and operating these assets. We do everything ourselves, which reflects the structure of our management team. We have expertise in each of these individual silos. So what does that translate to when you think about the general marketplace, the competitive landscape here? So on the left-hand side, you'll see you have a bunch of companies that are traditional developing and flip companies. So they'll go out, they'll find these assets, they'll find these locations, they'll sign up leases, and they will develop it to a point. Then they'll sell those projects and generate what we call a developer surplus or a developer fee. These are highly specialized, quick-moving companies who generally flip through projects very quickly and are able to monetize. On the left-hand side, that's that green circle. Those are a couple of examples of companies who are structured that way. On the blue side of the Venn diagram, you'll see a bunch of other types of companies, the Brookfields of the world, who actually buy those assets for the long-term recurring revenues. UGE is combining both of these economic models to monetize in the short term, as well as maintain the assets over the 25 to 40 years that these assets operate and generate that long-term recurring revenue. So there's a ton of value that generally gets lost when you're chopping up these projects, and we're hoping to keep all of that in-house at UGE. So to describe kind of an example of how that works and how we're actually building a long-term value creation engine, on average, we spend about 3 to 10 cents per watt over 2 to 3 years to get projects to what's called in the industry notice to proceed. So notice to proceed is when the utility says, yep, go ahead, you guys can start constructing, start building your projects. Now, that generally takes, as I mentioned, 2 to 3 years, but once we have the green light from the utility to start building, from then until we actually start operating our projects, we're pulling out what we call a developer surplus. And on average, that's about 40 cents per watt. And we can talk a little bit about what that means for UGE shortly. But that's money that's pulled out before the project is even operating. We're pulling out cash flow and recycling back into the business. Then after the projects are up and operating for 25 to 40 years, depending on the asset, we are generating 24 cents per watt of recurring revenues every year for 25 to 40 years. So we're really excited about the value that we're creating for our shareholders and for UGE as a company. So what does that mean with our current backlog? So if we have 320 megawatts of projects that we're currently developing that are in mid to late stage development, that means that we're going to be pulling out about $120 million of developer surplus in the short term, as well as building a portfolio that has operating revenue of $77 million every year. So what are the types of projects that we really focus on? Community solar is a large one, and I'll spend a little bit more time talking about why we like community solar so much. We also focus on battery energy storage system. We really think that this is the next frontier of renewable energy generation. It's fantastic to have a bunch of solar projects, but when the sun goes down, you need to have somewhere to be pulling that energy from. And then on the third slice, which you can see is a very small, it's really only a handful of projects that we're currently developing. That's working with commercial or municipal, having a bilateral relationship with one off-taker and selling energy directly to them instead of to the grid. So why do we like community solar? It really works well for both our mission and our bottom line. So expanding access to renewable energy, democratizing access is incredibly important to us as a business. It's one of the core tenets that this company was founded on. 80 to 90% of households actually cannot install renewable energy generation for themselves, right? Either you're a renter, you don't own the property, or you are a small commercial operator, you don't have access to land where you can actually generate or you can actually build your own solar field or storage system. So we are, the community solar enables us to sign up subscribers to purchase energy credits through the grid, and then it enables them to access renewable energy generation themselves. We also really like it as a business model. In general, these projects are a bit smaller and are able to get through the interconnection pipeline a bit faster. On average, it takes us 2 to 3 years versus it can be upwards of 5 years for utility scale projects to get through to notice to proceed. So we like our ability to be a bit more nimble. In addition, we're anchored to those retail rates that the end user is paying. So on average, that tends to be 2 to 3 times higher than the utility wholesale prices that the utility scale developers are receiving from the grid. So on both sides, we think that it's incredibly mission aligned and a positive thing for society, and it's also a pretty good business model for us. Our backlog and operating portfolio is large. You can see here, I won't spend too much time on this slide, but we are across the country in 12 states at the moment. Really focused on some of the places that have more mature, more or developing community solar markets. Spend a second on what the project development process is. So from pipeline, these are just prospecting conversations that we're having with potential landowners, to site control. These are places where we've actually signed a lease with somebody. We have the ability to build on their land. Once we receive notice to proceed from a utility, we can actually push that forward. Through to development, that is when we're actually investing material dollars into developing these projects, through to deployment, that's another word for construction, that's when we're actually building the assets, and into operation, that is generating electricity and kicking off for that recurring revenue that I described earlier. So you can take a look here and kind of see the breakdown of our portfolio, but I put a big red circle around development and deployment because that's really where our team is hyper focused on right now, is getting those 320 megawatts through development and into our operating portfolio. It's going to have meaningful impact to our bottom line, as I'm sure you would imagine. So just to talk about that a little bit, At 100 megawatts, our expected recurring revenue from generation would be about 24 million, and the gross margin on that is pretty strong at 22. Similarly, if we were really to develop our entire backlog, which we anticipate doing in the next few years, that ends up being $83 and $75 million in recurring revenue and gross margin. So we're really excited about the business model and think that there's a lot of potential upside, even just at where we are now. So this is a quick chart to describe our current operating portfolio. We have about a little over 6 megawatts that's currently operating, but we also have behind that 18 megawatts in projects that are currently in construction and will be turned on by the end of the year in 2024. So you'll see there's a continued, positive growth momentum for everything that we're up to. And just a quick rule of thumb for projects. It's generally about $3 per watt. So 25 megawatt operating portfolio ends up being about a $75 million in value of the assets relative to our fairly small market cap. So I wanted to spend a couple seconds talking about a couple of examples of projects. This is a project that we did in Tuckahoe, New York. This was done in partnership with a low-income housing development. This is built on all of their properties, about 260 kilowatts of generation. And we worked with them to enable more than 300 of their low-income residents to maintain some access to renewable energy at a discount to the grid rate and at a premium for what we generally would receive from being a wholesale distributor of energy. This also will offset 80 metric tons of CO2 every year. Yeah. That's right. Yeah, that's the way the community solar works. So Con Ed is crediting the end user and kind of keeping track. It's a billing mechanism for them to keep track of the cash flow that they have to send out to us. So that's right. That's a lot of the holds up with a lot of these generation, getting these projects online is working with utilities who can often be a bit slow moving, and it takes a lot to get them to the point where they're good to push forward on these projects. But yes, that's exactly right. And that's the case in many of these markets for all different kinds of utilities that we work with. So this is another example of a project that we've recently turned on. This started generating electricity in October of last year. This is a 1 megawatt project operating in Norway, Maine, and this was actually built on top of an old landfill. So in addition to being a positive use of this land that is obviously it's a capped landfill, so there's not much that you can really do with it. There's an additional tax incentive to being able to rehab some of these ecologically distressed pieces of land. And so we have been able to benefit from that, as well as the generation from the 1 megawatt of electricity that's getting generated. Last example that I put in here was our Foxcroft project. This is another 1 megawatt project in Maine. This is in partnership with an academy, a high school in Maine that is going to be some of the offtake as well as selling some of the energy back to the grid. This is going to offset about 1,000 metric tons of CO2 every year. And this project began generating electricity in December of 2023. So also one of our newer projects that we're incredibly excited about. You can see here a bunch of the kids on the football field at the ribbon cutting. So just a quick moment on our ESG principles. Obviously, we're incredibly committed to environmental responsibility, economic development, working with low-income communities to be able to create more democratic access to renewable energy, as well as social equity, resilience, and human rights and safety efforts. So with that, I'll take a quick pause. This is all of our contact information, our CEO and CFO, as well as myself. If there's any questions, I think this would be a good time to dig in. Yeah. Yes, all of our backlog, everything that we just discussed. Sorry, just to repeat the question, he was asking if everything is, 100% of our projects are currently operated or located in the U.S. Yes, all of our projects are located in the United States currently. Historically, we've had more of an international footprint, but given all of the tailwinds to the United States renewable energy market, it makes sense for us to be hyper-focused on this market. Yeah. Sure. Yeah. Sure. Yeah. Yeah, absolutely. Thanks, Jeff. So Jeff's question was in particular to how are we raising capital? How are we financing this? Obviously, as the portfolio is maturing, there will be more recurring revenue to lean on, but how are we financing things until we get there? So the answer is twofold. One is we really focus on working with partner banks to finance our projects on a project-by-project basis. So that is working with infrastructure teams within regional banks to come up with kind of very traditional project debt. In addition, we have a green bond program, which is focused on our corporate level financing that we've had running for more than 5 years and have been very successful in being able to generate, meaningful meaningful overhead capital in terms of building out the team and being able to set up the platform the way we want it to look. So I think those are going to continue to be our main, at least my main focuses moving forward will be those two programs. And our green bonds generally are collateralized by early stage development projects. So if anybody was interested in the green bond side of the business, happy to talk about that as well. Yeah. Yeah, the question was, what's the biggest hurdle to get a project done? And that's a very good question. Something that we're seeing across the industry right now is just the queues for interconnection are very long. It takes the utility a long time to work through the backlog of projects. And I don't think anybody's ever accused utility of being like incredibly quick moving and nimble. And so we do struggle trying to get their attention on all of the projects that we currently have working through our development pipeline. So I would say that's definitely our biggest hurdle. There's also always, red tape around permitting and kind of all of the regulatory pieces that have to go into getting these projects up and running. I would say process is a good description of that, yeah. Sorry? Yeah, exactly. That's right. The collections department is very quick, but their interconnection department is less so. Thank you very much. Yes. In the next few years or so? Sure. Yeah, I think we can go back here. I think I would have to double check when we're anticipating the 100 megawatt mark. But this is one piece of it. You also have all of the developer surplus that's also coming into the business that doesn't necessarily hit the income statement. So I can go into that a little bit more in detail with you afterwards if that's helpful. Okay, great. Yeah, of course. Yes. Hello. Sure. Yeah, we have been. I think that there's kind of the two sides of the interest rate question. One is on the project debt side. I think our spreads have remained very consistent. Obviously, base rates are moving around. So depending on when we price projects, there's slight variations in our financing, but generally a lot of, that's something that I'm also responsible for is our project financing. And on average, we're getting, 3 term sheets on all of our projects. So there's still a lot of interest in financing the project level debt. On the green bond side of things, yes, we work with a lot of high net worth individuals that we've had relationships with for long periods of time. They know us well and they know the projects that we've been developing, and we stay in close contact with them. We're also developing relationships with new foundations and additional types of kind of family offices that are also interested. We haven't done a green bond since December of 2023, but we're going to start to test the market again soon. So far, the response has been pretty positive. You said you had several questions? Oh, yeah. Yeah, I would say the answer to, sorry, to repeat the question for everybody who's online, how have batteries affected the overall interconnection process and our ability to get things through the process approvals? Yes, I think the answer to that question really depends on the market that you're operating in. For example, in California now, you actually can't do community solar if you don't have batteries attached to you. There's going to be a continued push towards developing more and more batteries across the board. So building our capacity to develop batteries is only going to add to our competitive edge as a business. And I think in general, there is a more positive sentiment to your question about projects that do have batteries attached to them versus standalone solar generation. Yes. Yeah, well, I guess it depends on if we're talking about levered or unlevered. Obviously, once we bring project level debt in, it reduces our need for, equity balance sheets, investment. I'll come back to you with the exact numbers on that. But in general, as I mentioned, it's about 3 to 10 cents per watt to get to NTP. And then after that, we generally bring in financing partners that are able to help on that. So we're targeting 12% unlevered IRRs on our projects. Yeah, so I think the question was about competitors. Competitors is an interesting question because there are kind of full life cycle IPPs that are in the community solar market. Soltage is a good example of them, but there aren't many that are publicly traded. So I think in terms of where you could actually get enough information to build real comps, I think it is kind of a trickier space. So I don't know, maybe I can give that some thought and come back to you. Yes. Yeah. Yeah. Kick the tires. Yeah. The value of these projects. Yeah, no, I did not make the number up. The question for everybody listening online is, where does the $3 kind of proxy valuation come from? It's generally a rule of thumb that we use. Obviously, each market is going to have their own nuances. But the way that our process works is as we, as we're securing financing, including our tax equity investment, we do have a third-party appraisal company come in and spend a lot of time kicking the tires on all these projects and putting an actual dollar valuation to it. That's how our tax equity is able to get comfortable that they're going to receive the tax benefits that we are saying they're going to be able to receive. So there is third-party validation on that. There also is an active secondary market of selling these projects, and in general, that's kind of the rule of thumb that we use when we're pricing our projects is about $3 a watt. So we've only got 1 minute left, so I'll maybe ask for last questions, if there are any. Okay. Well, with that, thank you so much for the time. And my contact information was up earlier. And if you need anything else, I've got business cards as well. Thank you.